Right, welcome back, good people. We are still continuing with the topic of VAT. Right, so today we want to look at what we call deemed supplies. Right, so we want to talk about deemed supply. So the main topic we are dealing with output VAT. Right, and in particular, we are dealing with deemed supplies. Right, remember we did talk a lot about output VAT in the prior week. Right, where we highlighted three situations in which VAT can be levied. Right, so today we want to continue with that, but this time looking at what is called a deemed supply. Right, so remember one of the situations in which VAT is levied, it is when there is a supply of goods and services. Right, when there is a supply of goods and services in South Africa. Right, so when we talk about deemed supplies here, right, when we talk about deemed supply, right, so there are times when there is confusion, right, about whether a supply has taken place or not. So SARS has identified certain situations which may give that kind of confusion, right? So when we talk about deemed supplies, we are saying, right, deemed supplies, right, are transactions, right, which,
Sorry, David. I'm sorry to interrupt.
yes.
Does this class also include 4861
No,
tax?
this one is for the undergrad for VAT, unless if you want to refresh, ne?
Oh, okay.
Yeah,
All right. Thank you.
4861. If you want to refresh, you can sit in, it's fine.
Because we usually have it around this time, and there was no link
Right?
that was sent.
Today we don't have the free class for tax at CTA level, ne?
Okay. All right. Thanks.
Gotcha. Right, so when we talk about deemed supplies, these are transactions which do not meet the definition of supply. Right, as discussed in the prior lesson. Right, so these do not meet the definition of supply as discussed in the prior lesson. Right, however, according to SARS, right, however, according to SARS, right, these should be treated as supplies. Right, sorry, there's a bit of noise in the background. It's raining out there. So these should be treated as a supply and attract output VAT implications. Right, so there are 5 situations, right, that qualify as deemed supplies. Right, number 1, we have got ceasing to be a vendor. Right, ceasing to be a vendor. Number 2, we have what we call indemnity payments. Right, we also have fringe benefits. Right, we also have independent practice. Right, independent branches. Right, and finally we have payments. Right, exceeding consideration. right? So obviously VAT, as long as it is part of your syllabus, you get a question on this. Right, it's one of the most popular topics and it normally gives decent marks. You need to be very clear. And the team to supply are almost always there in every question, at least one or two. You always deal with what? Team to supply. Right, we want to start by looking at ceasing to be a vendor. Right, ceasing to be a vendor. Right, so we know this about a vendor. Right, on purchases, right, of its own supplies. Right, these guys can claim input tax. Right, as long as they use right their purchases to make taxable goods. Right, or services. Right, so this applies to a vendor. Right, when a vendor purchases things that they use in their business to make taxable supplies, right, they are then allowed to claim back any input tax that they would have paid over to their own supply. Right, that's a vendor. And at the same time, when they make supplies and they charge VAT because they are selling taxable goods, they have to hand over to SARS what we call output VAT. Now, for someone to be able to claim input VAT, it is dependent on them being a vendor. Right? Input tax, right? Input tax is claimed only by a vendor. Right? When they paid input tax to the supplier. That is the other way. Sorry about that. So when they paid input tax to their own supply, then they can claim it back from SARS. But remember, this is dependent on them making taxable supplies also, right? Using those goods that they would have bought from their own supply. Now they are able to claim this because they are a vendor, and it can therefore happen that an entity can decide to deregister from the VAT system. So in which case they cease to be a vendor. Right. So when an entity now ceases to be a vendor, they are no longer what? Eligible to claim any input VAT. Right, which means that any input VAT on goods and services that they still own, sorry, on goods and debtors that they still own, when they cease to be a vendor, they have to pay taxes. Right? Right. So about that. So any input VAT that they would have claimed and received from SARS, when they now cease to be a vendor and they still have the goods or they still have debtors on those goods and services that they claimed input VAT on. Now that they are no longer a vendor, they must pay back the input VAT, in which case they paid out now to SARS as output VAT. Are we clear about that, good people?
Yes.
All right, so this is what we are talking about when we say ceasing to be a vendor. So therefore, we are saying on ceasing to be a vendor, right? On ceasing to be a vendor, right? An entity or a person, right? An entity, right? Or person, right? Should account, right, for output VAT on, right, goods, right, and claims they own, right, when they cease to be a vendor. Right, and also own creditors, right, when they cease to be a vendor. Right, so you have to account for output VAT, right, on your assets, which is goods as well as debtors that you have. So when we say claims here, we're talking about debtors, right, on goods and debtors that are in your books on the day that you cease to be a vendor, right, and also on creditors that you have on hand when you cease to be a vendor. Now, what must be clear is that the output VAT is a reversal of an earlier claim on input VAT on the goods, services, sorry, on the goods, creditors, and debtors that you have when you cease to be a vendor. Because when you now cease to be a vendor, you're no longer eligible for any input VAT claims. So any input that you claimed on things that are still there in your business, then you need to pay it back to SARS. That's what output VAT is trying to what? To calculate. Right, so there are a number of things that we have got to consider. Right, there are a number of things that we've got to consider. Right, remember, output VAT, right, aims to reverse an earlier claim of input VAT. Right, on purchases. When you're doing on purchases, you claimed input VAT on the strength that you were a vendor. Now you have decided not to be a vendor and you still have those goods, then you have got to pay back the money. All right, so what does it tell you? Right, if input tax was denied, right, if you never paid input tax, or if you never claimed any input tax, right, if you have never claimed any input tax in the first place, then output tax will not apply. Right, it is possible that you never claimed, right, or examples, right, where input tax, right, was not claimed. Right, if you are making exempt supplies, right, if you are making exempt supplies from purchased goods, remember you were not going to be able to claim any input VAT. Number two, if input tax was denied, right, there are situations where even if you are making taxable supplies, input tax may be denied, and there are two main situations where you supplied entertainment, right, or you were carrying a motor car. Right, so when input tax is denied, it is the VAT Act standard says when you supply entertainment either to your own employees or to your customers, then input tax will not be claimed on those expenditures. Right, for example, when you buy a stereo system for your shop floor so that you can actually play some music while the employees are working, that's entertainment. So the purchase of those speakers and the rest of the stereo equipment, right, you will not be able to claim any input VAT, even if you are charged VAT from the supplier. That's entertainment, right? Entertainment includes such things as the provision of meals, right? Provision of refreshments at the workplace. That's entertainment. And anything that goes with provision of those, edibles in terms of lunch, refreshment, etc., which means the utensils that you use when you buy them, you cannot claim input VAT. The stoves, the coffee machine, the microwave that you could have been using there, you are not allowed to claim any input VAT. Right, so what it means, therefore, excuse me, right, so what it means, therefore, is that when you cease to be a vendor and you have those things that were used for entertainment, maybe you still are owing for buying a microwave on credit, which you haven't finished paying, which means there is a creditor, right? Maybe you have some equipment that you're using in your kitchen, which is good. You cannot be expected to pay output VAT because you would have never claimed any input VAT. Are we clear, good people? Are we understanding it?
Yes.
Right, and then motor car, right? If you buy a motor car, you are not allowed to claim any input VAT. So therefore, input VAT will be what? Will be denied. So in such a situation, you don't have now to pay what? Output VAT in connection with a motor car. So that is very important to understand. Right, then another consideration that you've got to think about when you cease to be a vendor, right? If you cease to be a vendor, right? If you cease to be a vendor, right, because, right, of death, right, or what is called sequestration, right, output VAT is not payable. So we've got to look at the reason for ceasing to be a vendor. If it's by way of sequestration or by way of death, then there will be no implications for output VAT, even though you have ceased to be a what? To be a vendor. Right, then in connection with the debtors, or in connection with creditors, right, there is a provision, right, there is a provision, right, called section, I think it's 22, it's 22C, I think, right, let me make sure that I get the correct provision there, right, but it's section 22, is it C or A? Right, let me check that provision. I will explain what it means. It's actually provision, section 22, paragraph 3. This is of the VAT Act. Now, this particular provision says, right, if a credit debt, right, is owing, right, for more than 12 months, right, output VAT is payable. Right, on the outstanding amount. Right, you know that most companies, they remit VAT to SARS on what is called the invoice basis. Now, the invoice basis simply means VAT is accounted for, right, at the earlier, right, of invoice date or payment date. right? So invoice basis, VAT is accounted for at the earlier of the invoice date or the payment date. Now, the implication of this is that when you buy something on credit and you receive an invoice, right, as soon as you receive the invoice, even before you pay your supplier, right, you should account for the VAT on the strength of the invoice. So you don't have to wait for payment. Right, so SARS will then allow you to claim input VAT on this purchase, even though you have yet to what? To make a payment to your customer, to your supplier yourself. But because you have a valid invoice that is proof that you have got something, right, you can now claim input VAT before you make a payment. Now, SARS then gives you a full 12 months to make the payment. Right? If in 12 months you have not made a payment and you still have outstanding creditors, then SARS is no longer sure if there was any valid transaction of sale between your supplier and yourself. Right? And then SARS will then say, whatever input VAT that you claimed, then you must pay back if you haven't paid your debt to your supplier within a period of 12 months. Are you understanding that, good people? Right, are we there? Are we understanding it?
Yes.
Yes, because what happens, let's say you're supposed to pay VAT on 28 February, right, of the year 2025. That's when you make your payment for VAT. Your VAT is due on this date. Right, then you buy something on the 25th, right, of February, right, for whatever amount, maybe 200,000. But this thing, maybe you've agreed that it is payable in 6 months with your own supply. Now, when this date arrives here, you go to SARS, you say, I purchased something, you produce the invoice, you claim VAT on this amount, which is input VAT. Right? SARS is trusting you at that point and saying, okay, it's fine. Yeah, we can see the invoice, it's a valid invoice. We therefore agree that you have purchased something. Even though you haven't paid, you can claim your input VAT. Then they give you the money. Right? 12 months down the line, right, you are still owing your supplier. SARS is saying, wait a minute, maybe this transaction did not take place. How come you haven't made a payment for these goods? So now we are not sure if a transaction has taken place. Can we please have our money back? Then you will have to pay it as output VAT. So that's important now to understand. The reason for that is that sometimes when you have creditors, you must first check if the provision 22.3 has been applied. So you must check whether the debtors are less than 12 months or are above 12 months. If the debtors are equal to or above 12 months, then you must check whether provision 22.3 has already been paid for or not, whether the output VAT has been paid or not. Now, if section 22.3 has already been applied, it simply means on what you call the creditors, which are more than 12 months already, you have already accounted for output VAT based on section 22.3 without looking at ceasing to be a vendor. So when you cease to be a vendor, you cannot account for output VAT into duplication. Are we clear? We are quiet. Right, there is a provision called section 22.3. If a credit or debt is owing for more than 12 months, output VAT is payable on the outstanding debt. Right, so on ceasing to be a vendor, right, on ceasing to be a vendor, right, if section 22.3 has been applied, right, meaning to say output VAT paid. Right, there is no output VAT implication. Right, there won't be any output VAT implication in this instance. Right, for creditors owing, right, for less than 12 months, do not consider section 22.3, doesn't apply, which means you have to account for output VAT. Right, you will have to account for output VAT. Right, where creditors are concerned, or right, where goods are on hand on ceasing to be a vendor, right, on ceasing to be a vendor, output VAT is accounted for. To the extent that those goods and services were paid for. Right, very simple. It simple means if I bought a vehicle, there is a difference between a motor car and a vehicle. A motor car input tax is denied, a vehicle input tax is not denied. So if I bought a vehicle for 100,000, but I've only paid for 80,000, right? It simple means that 20,000 is in creditors, right? And then 80,000 is what I have paid for. So here I can account for output VAT, but I will not account for the full 100, which means on the value of the vehicle, I can only account for output VAT on the portion that has been paid for, which is the 80,000. This is because when dealing with output VAT, we calculate output VAT on the value of goods, and the value of goods here says 100,000, but only 80,000 has been paid. But we also account for debtors. Right, so when I go to debtors, or sorry, to creditors, this amount, which is 20,000, will be sitting in debtors. So if I take this amount and I calculate output VAT on it, then I take my debtors, maybe which are 50,000, they are including 20,000, which is there. So that will represent a duplication. Right, because here I'll come and say 15 over 115. If these creditors are below what 12 months, then I'll get my VAT. But remember now we are saying included in the creditors here is 20,000, right? Which is also in there because I bought something for 100,000. I have only paid 8,000. I am owing 20,000. When I go to motor vehicles, this is the value of motor vehicles. When I go to creditors, this will be included in creditors. So if I calculate output VAT on the total, when I go to the creditors, which include this amount, I'll have a duplication. So SARS now says only account on goods on the portion that has been paid for. Then the 20,000, which will be accounted for separately as part of creditors, then you avoid duplication. Right, are we clear about that, good people? Are we understanding it?
Yes.
All right. So, right, how do you determine value of supply? Right, it is the lower of cost, right, or open market value of asset. Right, that is if we are dealing with an asset. Right, it is the lower of the cost of the asset or the open market value of the asset. What about value of supply of creditors? right? It is the outstanding amount. It is the outstanding amount on ceasing to be a vendor. Right, that is the value of the supply. Right, so on ceasing to be a vendor, you need to be very clear on these notes that I've given you. Then you should be in a position to answer a question. Let's go to a question, unless if there is a question from the floor. I upload the question.
Sorry, sir, before you go to the question, can you please repeat the value of supply from the asset?
All right, if it's an asset, it is the open market, the lesser of the open market value of the asset, right, and the cost of the asset. So you choose the lower of the two. So they always give you the cost there of the asset. They always give you the open market value. So between the two, you must choose the one that is the lowest of the two. Right. Did I
No.
upload the question? Did I upload the question here? No, I forgot to upload the question. All right, 1 second. I'm going to upload the question here for ceasing to be a vendor, and then we can discuss the question.